Hey guys, hope everyone's well. So today we're doing one of my favorites. We're going to be covering support and resistance. So we're going to take you guys through the basics and I'm going to show you a couple of tips and tricks of how you can adjust support and resistance. So without further ado, let's get moving more than average. Right guys, support and resistance. In an attempt to not make this a very lengthy video, I'm going to try and keep things as simple as possible, yeah? So, simply put, support and resistance are areas where the action happens. It's what you as a beginner trader should be using. It's what you as an advanced trader should be using. It's just something that you need to have knowledge of in order to become a successful trader. The better you understand how support and resistance works, the better for you it becomes, right? So, first things first, one thing to remember is support and resistance can change sides from each other. So, resistance can become support in an instance where a market breaks through an area and then comes to test it again. So an example of that would be something like this. So the market came up, resisted the area, came down, came back up, broke through this area here, and then it became support. So see, resistance, support, right? So guys, what I'm going to do now is I'm just going to show you how we plot lines on a support and resistance chart, right? So I'm just going to plot the lines first, and then I'm going to show you guys the tricks that we use in our team to kind of do our support and resistance lines in a specific way, right? So as you can see, I'm plotting it on a daily time frame. To be honest with you guys, it doesn't even matter. That's how solid this way of plotting the lines are, right? So I'm putting my lines in. The more wick touches, the better. Let me scroll down to a 4-hour chart quickly. Yeah, that's fine. So see, you can kind of refine the lines a little bit better. But for the sake of this video, I'm just going to do it on a daily and show you how it interacts. Right, so rule number one, think 00 and 50, always, right? So if we look here, we're gonna round our numbers off to the nearest 00 or the nearest 50. 700. Here we have 00. So you can see it's not much changing where I already plotted the lines, and that's a good thing, guys. 50. Ooh, 50. Another 50. And we make this one 900, right? Cool. So now we have support and resistance lines. So just to recap, guys, we break through, right? We break through, we come retest. See, resistance, market tried to pull down again, pulled up, it failed again, came down, broke through, came down, retested the same area, respected that area, as you can see here, respected it, and then continued to the top side. So do you see what we're getting at? So for example, what I could have done was on that entry, on that entry. So I came up, we rejected, we confirmed with a bullish engulfing candle here. The market retested, sort of held. So most people would have taken the buy there. However, I like to see a bearish move before taking the buy. So the market came to retest. Yeah, we got a bullish confirmation candle. That was my signal to get in there, right? Then the market came down, but look, I'm not getting stopped out. My entry was here, right? My stop loss needs to be here because your stop loss always becomes below your support line, right? My stop loss is here. I don't get stopped out. Bam, catch the move, right? So I think the best way to explain this bit is to kind of take it to a 4-hour chart. Now, guys, take note of the fact that I'm not putting in more support and resistance lines in the lower time frames. You can obviously, I'll explain to you guys why, right? So, for example, yeah, the market came, it failed, it came down, it respected the resistance, came down, it broke through, tried to test it, broke, we wicked, After this candle, I get in, I buy to the next key area. So the reason why, remember I said to you guys the zeros to zeros and all that, like you mark them off like that, right? However, you chase it from key area to key area. Now remember, this is a very important thing, guys. A support level, you can never determine if a market's going to touch that exact support level, right? You can never determine whether the market can touch that exact support level. So what I would normally do under normal circumstances is draw a little barrier around them. Remember, a support area is not an exact number. Like it can't be an exact number. I can come and build areas around them. No? So, like zones. It's a zone. It's not one specific thing. This is where most traders fall short in terms of, like, take here for example. The market broke through, it retested. It didn't retest that area. Now you either wait and you wait and you wait for something that's never going to happen. Where if you think about it as a zone, you could have taken the buy from here. It came, we broke structure here on this one, confirm, bullish engulfing, get in, poof, chase the trend line. Chase the trend line. Chase up to the previous highs up here. Or chase this line. Yeah. Same thing here. We broke through, we retested, didn't necessarily touch. But if you thought about it as a zone rather than a touch area, you would have taken the area. Right? You would have taken the entry. Right? So guys, there's multiple ways to kind of view it. But always remember that support and resistance should be seen as an area rather than one specific line. Sometimes it touches your line, sometimes it doesn't. So if you're drawing blocks around it, and you guys will notice in my other videos, especially when I share the market outlook, I have rectangles all over the place. This is why, right? Some areas can also be wider than others. So the whole idea would kind of be to as many wick touches as you possibly can. The more wick touches you get, the more valid that area becomes, right? Don't force it. Don't make it like, we can't do something like this, for example, just to make that a specific area. Rather be conservative, right? Move it downward, like move it like that, like make sure that you always view it as a zone rather than one specific area, right? That's the second thing, right? Using this to seek entries. Now, guys, like it's very difficult to explain this in a way that's going to make sense to you because it would depend on what kind of trader you are, right? But for me and how I use it, I would do this basically. So I put my support and resistance on a daily. I scaled to 4 hour. I didn't do mid levels. I didn't do any of that stuff, right? I then go to H1, right? I would then look for entries somewhere on an H1 chart, right? Like, for example, the market now broke through. Now I'm waiting on a retest of some kind here, right? Let's zoom in a little bit so we can see nice and clearly, right? Now I'm waiting for an entry. The market comes through. And now we have this whole range, but the market doesn't seem to want to come down, right? So now we're seeing higher low, higher low. There we got a break in structure, lower low. So this is my indication that, hey, the market's actually going to retrace soon, right? Now remember, if I'm on a H1 chart, this can also be seen as a mid-level. So this is where I start ignoring the sentiment around 00, 10 of the ones I didn't mark off. These are solely based for entry. If I go here, right, and I look for an area. So to see, guys, why I always tell you, look for 00, 50, right? If I go 15, 12, 50, bang, right? Now remember, this is also in a zone here, right? I can do this, put my zone in, right? That becomes my entry zone because now I see, oh, the market rejected. There's my lower low. Here we're ranging a little bit, not going to take it. Okay, I see it broke structure here again. I can get in now, right? This here, this liquidity is exactly what we needed. This here is the investors eating up the liquidity, right, from the downside. And then we get in. From here, I buy, right? That's just one example of how I could have caught an entry there. So remember, while I don't mark them off per se on my chart, this is what my chart would normally look like. I know there's other 50s and 00s within this vicinity that can allow me to take entries from there, right? If you wanted to be like this, for example, perfect example actually. Now for this, what we need is our little gun here, right? The market comes downward, down, down, down. Here we broke structure. That's my first signal, right? To get in, right? That's my first. Then what we need to do is we need to seek other points of entry for whatever other reasons we can find, right? So we came down here, we came into my area, the market came up, it retested, it formed the higher low. This was my confirmation candle, here's my entry, right? The risk to reward would then look something like this. That's my entry candle, I get in from here, I chase from my 1 key level to the next, so that's my take profit. Because we didn't come into this major area, but we did come into that little 750 zone, you see there? We came into that zone, perfect. So what I do is I pull the stop loss all the way up here to just below that wick, bam, we get in, right? The market came down, we in nice profits, we retested. But guess what? There's another mid-level of support here, right? That mid-level was perfect for me as confirmation that if I took the entry here and we came down, right, I would more than likely retest here first before continuing to the top side, because when we look left, we couldn't clear this area here, right? Bang, we're in. Now we're coming down, right? Didn't come back to my entry. Perfect. Bang, rolled it all, and look where we went to, poof, all the way to our top area, right? Then a second thing you can look at here is, let's say for example you were in a group and they sent you this setup, right? The one that I have on the screen currently, like this, right? You could then also tell yourself, hey, there is a support and resistance level. This market's then going the wrong way from the trade. That was your indication that you could have got in again. So now the market's ranged to the downside, right? Came to a mid-level of support because it's valid on the H1. It's a valid support area. I'm looking left. It's looking good. Look here. It's looking good. Now the market pulled in. That's the second entry point for you there. So me, what I will do is I'll take this trade and I'll take it again. What's even better is to reward, right? Same thing, guys. Cycle, 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 right? Bang, ran into my line, and look what happened. I caught two entries off of the same thing, of the same principle. The first one off my major area. Here we rejected, we broke the structure, but because we came into the vicinity of my zone, right, I was comfortable with taking the trade. This one, while more risky, obviously clearly paid off, right? Then the market came up, up, up. It came down. I saw my first bearish candle. I'm like, oh, here's that retest. Here's my first area of concern. Let's see what happens now, right? Then it came down to this area. This area would have been marked off by these things here. I look left. I see, okay, no, there is a support area there. Cool. Once we came in here and we confirmed this bullish candle, that was my second entry. Bang, in again, right? So my entry would be something like that. My stop loss would be something like that. However, my risk to reward is still 241. I mean, for me personally, guys, I would have put my stop loss down here and I would have more than likely have once we rejected it the first time. Let me just zoom in to show you. Once we rejected it the first time, right? The first bullish candle, second bullish candle, I would have gotten in from there already. So my risk to reward would look something like that, right? Another thing that you could have taken into account here, guys, and this plays so nicely into the way support and resistance functions. We look for bull stacks and bear stacks, right? Three bear candles, 1, 2, 3, bullish candle coming in. After that, three with the two bullish confirmation candles, that was also a sign for me to get in. Plus, this here is a higher low, breaking structure, right? However, as a conservative trader, you wait for the engulfing candle. Here you go, boom, engulfing candle in there. If you took that one, alright, let's say you waited and you were more conservative and you took that one, your entry is here, the stop loss is here, right, and you take profits all the way up there. Look at that, brilliant, 4:19 risk reward, beautiful. That's three entries based off support and resistance, right, that you could have taken off that, just this setup here alone. Three entries from key level to key level. Guys, like the importance of trading on a key level, from key level to key level, is vital, man. Like, look at this, perfect. The market came up, it retested the support area. Here we got the first rejection. Now the market tested again. The minute this bullish engulfing candle came in, bam, you ran it all the way through. Now, like I always say to the guys, don't go chase the entire zone. When you come up to that area, close off. This is beautiful risk to reward, guys. You see, you could have caught this whole move and catch the entries on each and every single mid-level. Here's a mid-level for another entry. Here's a mid-level for another entry. Actually, here's another one for another entry. So you see why it's important not to just FOMO enter and rather wait for a retest. Look at that. Perfect. You could have catch 1, 2, 3, plus the big one, 4 entries off of that one thing. So I just want to show you guys how it would interact on a sell side. This is a perfect example actually. So the market came up, it rejected here. So I personally wouldn't have taken this sell here because of the price action to the left here. Then the market came up, it came back up. Now guys, you can trade these ranges, but I personally don't, right? Then what we look for is a break of this line. So remember, this is a double top here, right? What we do is we wait for a break of the double top. Bam, there you have it, and a retest on rejection, right? So here's my rejection candle, right? It came up, it failed, it broke back down, it came in, and now it just dropped. So that's where my entry would be, right? So my entry would be somewhere here, right? With a stop loss up here and a take profit down here, right? Perfect. 3 is to 0.5, right? That's a perfect example of a sell, right? Another one would be something like this. The market came up, it came up, broke through, rejected, came back, retested. The minute the market retested here, right, is where you could have actually have made moves, man, right? So it came up, it went up here, rejected. There's your bullish and your bearish engulfing candle right there. The second candle is your entry. You get in from here, right? Remember, here's your support area zone, right? You pull this down here, this comes down here for your entry, right? You pull it here, always just above where the action's happening. So it's not necessary, remember, because it's a zone, you kind of need to leave leeway for the splits up here that might take you out. However, your take profit is all the way down by the next support area. Now guys, take note, I've not left 450s. I never left the 50s or zeros ever, not once. And look at that, perfect risk to reward, right? Another example, we broke through, we retested. Now remember, because we're still in the zone, of it all, right? Take note of what's happening above here. We're still in the zone, right? Came up, rejected my zone, came in, bearish engulfing candle, get in here, take this here, just there, bang, bang, Bob's your uncle. Now, to obviously master your target levels and everything like that, my recommendation would be to learn to use the Fibonacci. That's a video that's going to be uploaded very soon. But that's how support and resistance works, guys. I mean, the things I would recommend using it with is understanding how liquidity works, as we will be uploading a video soon. Fibonacci is a very, very key thing in order to use support and resistance. Trade from key level to key level. Don't be greedy. As your trading skill progresses, you'll actually find that your targets become further and further away. You become more able to target things like these, even bigger. Like I can show you, like if we actually did a full video, we could show you how to target things like this, right? However, this is strictly meant for you to up your knowledge of support and resistance, and for those reasons, we kind of kept it a little bit simple. In the coming days, we will share some more things where we start tying everything in together, how to use the RSI properly, certain things about the RSI and everything in between. So for now, guys, just to recap, remember, work in 00 and 50. Always take entries of bounces off of your support and resistance area. Trade from key level to key level, and always make sure that you're not only taking that thing like entries are solely based on 14250, for example. Always remember to draw rectangles over your charts. Remember that if you miss your first entry off of a setup that was shared with you or something that you saw, just wait for a retest like we covered on the buy side of things, right? And that way you can always catch more entries, guys. Like, look at this, perfect. Like, this is a perfect example of how you can re-enter again and again and again off of the same thing, but you're still trading within a key area, right? That's why I marked my chart off on the daily and then started only using those mid levels for added entries or better entries in the latest stage. So as time goes on, like I said, we'll be updating the videos more and more. And with that being said, keep it moving more than average, guys.